Let's see. I know there were some things that we talked about here. So verify business name, EIN, 1099s. Okay, income verified, bank statements. Is it verified bank? Okay. Okay. So from here, another thing we need to look at here is the bookkeeping for the year, right? Okay. So this bookkeeping has a lot to it. It has bank reconciliation, right? And then you have checking, credit cards, loans, and then you have like loans, like line of credits, and then you also have, I'm gonna put equipment, and that includes vehicles, okay? So you have to reconcile all of these things, because here's the thing. You know how many times, even on my end, I forgot to do a bank reconciliation on the vehicles, and came to find out that they still were making a payment. Like, why are you still making payments on this equipment if it was already supposed to have been zeroed out, right? Because when you look at a balance sheet, you look at the debt, and then, oh, because for example, the bookkeeper forgot to split a payment. If you forget to split a payment, then now your balance sheet is going to be out of balance, because the interest and the principal is not in sync. So being able to reconcile every single one of these items is extremely important. So so we have the bank reconciliation, we have the bookkeeping. What else here? You should definitely have all vehicle contracts. And then, so on the vehicle, okay, so all vehicle contracts, and here, right, they should have mileage log, right?
Mhm.
And maintenance records.
Oh, maintenance.
The maintenance records is key. That's what I use for the mileage. That's like the most straightforward. And here's the thing. I think we talked about this. Who in this class has done field audits? So I've done field audits, and I know what they look for when it comes to mileage logs. And they're looking for a type of, mileage log that's electronic. And they're also looking for the maintenance records to match the mileage log. So if you had X amount of miles from January through, let's just say, May, and you have, say 7,000 miles, and you're gonna have 7,000 miles in your mileage log where it's out of balance, then again, you have to reconcile those vehicle records as well. If you think about it, that's a lot of work. And this is the work that a lot of people are not doing. And they're saying, well, I've never done this and I've never been in trouble. Well, that's because they've never been in an audit. Okay. However, is that the ideal client that you want? The answer is no. Your ideal client is going to want to be, they're going to want to go to sleep well every night, knowing that everything is being done. So they're going to pay you for your time, because you're going to impress them by the amount of work that you're going to be doing for them and how prepared they are. And here's the thing, when they want to sell their business, who do you think is going to get the most money? If they're making the same amount of money, let's just say they're making the same amount of money, who's going to sell for the highest price tag? The person who has all of these things in check, or the person who still has a check, shoebox? Because here's the thing, if they're making the same amount of money, but their stuff is all over the place, it's not verifiable. This is verifiable right here. So if they say, oh yeah, I have all these trucks and I pay this for them or that for them, okay, where's your contracts? Where's your maintenance records, right? So if they have all the maintenance records, they're going to be able to get top dollar for their equipment. Do they have personal vehicle? Absolutely, 100%. Let's see what else. So definitely study personal exemptions, right? Well, here's the thing about that. Because they can lose credits. Not only can they lose their credits on the personal exemption with somebody that's single with no kids, 12,000 bucks out the door if you don't do it right. Here's the other thing you could also lose. Ready? The child credit. Because if you legitimately have a business that makes $50,000, they might not have all these benefits, but if they buy a car that gives them bonus depreciation and it's a legitimate business use, you check off all the things that they have to have, the mileage logs, the personal vehicle, and everything, and that puts them in a sweet spot. All of a sudden, instead of owing, they're going to get a refund, even though they're self-employed. And again, and a lot of people will just love you for it. And here's the other thing too. If you make up things to get there, then that's when you get in trouble. That's when ethics comes in. So it is important for you to have your books and you have that tax planning during the year so that you can make things happen. So study the personal exemptions during the year, not at the end or not, the following year. And then you could tell them, hey, we just had, let's just say it, $3,000 conversation, $5,000 conversation. And this is why I call this my $5,000 checklist, because regardless whether they're single, married, or have kids, you can easily save them $5,000 in self-employment tax and taxes, or get them a refund, even better. So that's more like 10,000. So now only are they not going to pay the $5,000, now they can get $5,000 back because they have kids. Hey, and all because of a vehicle that they still on the hook for, right? So some people might say, well, I don't like that. I still have to pay for this car. Yes, but that car is going to make you more money. And now you get to spread the tax bill over X amount of years. How many years? How many years do they have to pay the car? So if they have 6 years to pay the car, they will pay that tax bill in 6 years. And that's amazing if you divide it by 52 weeks for each year. It's going to be crazy, right? Because they would have still been on the hook for that.